Good morning. This is Larry Edelson for my Uncommon Wisdom weekly video market update for Monday, September 19th. Well, the past few weeks have certainly seen considerable volatility in the markets, wild swings in market psychology and sentiment as well, and lots of pretty wild news out there, especially surrounding the European sovereign debt crisis, which continues to worsen to the point even that there's now, as I predicted, considerable talk about the weaker European economies, such as Greece, Portugal, Italy, actually defaulting on debts and pulling out of the euro. I would not be surprised to see that happen, as I've long forecast the euro currency was doomed, and we are in that opening act of the failure of the European Economic Union and the European currency, or the euro. And this is really also Act 1 of the global sovereign debt crisis, which will be hitting the United States, already has started to hit the United States, and that will be Act 2 of the crisis. And all this promises to be much worse in many respects than the Great Depression. The symptoms and the features of this crisis will be, however, considerably different. Having said that, let's go right to the markets. Gold, as you know, I was probably one of the lone bears out there calling for some kind of correction in gold, and many disagreed with me and thought I was pretty much insane. But lo and behold, in the past few days here, we now have gold breaking down below 1800. We are very close to a weekly sell signal at about the 1766 level. If that gives way, I am looking for, at minimum, a retest of the 1701 level from a couple weeks ago, and probably much lower down to the 1625 level to begin with, and ultimately down to 1500, even 1400. I do expect some damage to be done here in gold, and I want to repeat that this is merely a correction. You should not be buying gold during this correction, during this period, but you should be positioning yourself to load up on gold when I give you the all clear signal when this correction is over. Gold is going much higher over the next few years as the European sovereign debt crisis deepens and as the crisis in the United States deepens. So I would not be surprised. Of course, my long-term target is to see gold over $5,000 by 2015. I want to now go to silver. Silver is beginning to weaken as well. You can see silver did not take out that $44 and change high from a couple months ago, and now we are beginning to break down. I am still looking for at minimum tests of $34 in silver, and probably even lower to about $30. So again, I do not recommend being in silver here at any for any position other than for aggressive speculators to perhaps, trade the short side with tight stops. The dollar. I did indicate to you before, the dollar on a long-term basis, of course, nothing's changed. The dollar remains in a long-term bear market. I did indicate to you that we would probably see some kind of short covering rally in the dollar as the euro got hit by the sovereign debt crisis there, and indeed that has happened. I did say I wouldn't be surprised for the dollar index to get up to around 80. So far we've gotten up to about 78, as you can see in this chart here, and we're pulling back. I expect one more leg to the upside in the dollar, and we'll probably see the 80 level, possibly 82. That does not change any of my research or work for the dollar on the long term, which, as I've said many times, we will see the dollar move substantially lower, lose a lot of its purchasing power heading into 2015, where, at the latest, I expect the dollar reserve system to basically bust up and a new monetary system, the world be forced onto a new monetary system. Now, the Dow Industrials, very interesting. The Dow did break down. We got down to about 10.5. We've been choppy since then between 11.4 and 10.8. We continue to chop around in that area. My bias is still towards the downside. I expect to see the Dow fall to down 9,000 within the next few weeks. However, I do want to point out that this choppy sideways action here in the face of the crisis that's occurring in Europe, where major banks and major derivatives problems could easily go under, dwarfing what happened with Lehman Brothers here in 2008, is indicative of a layer of long-term strength in the Dow that will lift the Dow in the coming years, probably to new record highs. Now, I don't want you to get confused. Short-term, I'm bearish. Long-term, I'm bullish. I'm bullish on the Dow Industrials and select blue chip type S&P 500 stocks in the United States simply because they will become recipients of large international capital flows as Europe goes down the tubes and as the United States goes down the tubes as well, even though the underlying economies will continue to worsen in Europe and the United States. This is what happened in the 1930s, actually. Okay, few people realize this, and the stories of the Great Depression and the truth about the Great Depression gets greatly distorted by a lot of analysts and a lot of research and publications out there. What happened in the Great Depression was this. The stock market from the 1929 crash made a low in 1932. Between 1933 and 1937, most of Europe started to default on its World War I debts and other obligations. And what happened to the U.S. stock market? Even though the United States economy continued to suffer in a Great Depression, the Dow Industrials went up almost as much as 400% between 1933 and 1937 as Europe was defaulting and as the U.S. economy was sliding lower and lower. The same type of thing can happen in the United States. We are not there yet. Okay, we're not there yet, I repeat. We're probably going to see more downside in the short to intermediate term, say over the next month to 6 months. However, at some point in the future, we are going to see the Dow take on a flight to safety type of situation, much like gold, and go up again with gold to much higher levels as capital comes out of the bond markets, comes out of Europe, and goes into top shelf U.S. stocks and into gold. Now, having said that, I know my views are very controversial. You won't hear this pretty much anywhere else. But mark my words, there are a lot of people that are on the wrong side of this market long term. And I want you at least, if you don't believe me, at least keep an open mind and go back and take a look at what really happened during the Great Depression. I'll be writing about it extensively in the future, and you can stay tuned to my publications there. Till my next video update, this is Larry. My column, my written column, will be out next Monday, and we are alternating the videos now every other week. I will try to add additional videos and push them out to you when the markets are really at critical junctures. This is Larry. Have a good week.